high migration levels have been one of the factors blamed for our rising house prices, our housing shortage, skyrocketing rents. Well, the latest immigration figures have come in. What do they mean for housing moving forward? That's one of the factors we discussed today with Dr. Andrew Wilson in this week's Property Insider Chat. We also talk about international students and are they creating a housing or especially a rental shortage? The cost of construction, that's starting to creep up again a little bit, and even some auction results for the last week. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we let you know each time a new show comes out. Our migration figures have come under close scrutiny since Australia emerged from the COVID pandemic. Look, with the return of overseas migration has been blamed as one of the reasons for our extremely tight rental markets. The ongoing undersupply of housing and rental properties has helped to push up home prices and rentals, adding to the cost of living burden facing many Australians. However, with no quick fix to supply issues, both the federal government and the opposition turned their focus to the demand side. Each side proposed tightening migration to reduce housing pressure. Well, the latest migration figures have just been released by the Australian Bureau of Statistics, and even though overseas migration has reduced, is it going to be enough to fix our housing problems? That's one of the questions I'm going to ask in this week's Property Insider Chat with Dr. Andrew Wilson, Australia's leading housing economist. Hi, Andrew.
Yeah, good day, Michael. And no surprise, those migration figures have declined. The government signalled that they're going to take action because they're concerned about the lack of infrastructure. A little bit of logic here. Let's think about why, if we had these terrible shortages of property, which have pushed up rents and prices, apparently, given the revitalisation of migration, why didn't we have sort of undersupply when we didn't have any migration? Surely that would have been the other end of the spectrum, would be that when we didn't have people coming into the country during COVID, it would have meant a lot of empty places, and therefore when they came back in, there'd be lots of places for them to choose. But of course, it's not a position based on demand, it's based on supply, why we've had higher rents. And all you have to do is look at those building approval data and building completion data to see that we've just stopped building for a decade. And the ups and downs of COVID and lockdown and then opening our borders again have just exacerbated that, because, we've gone from, famine to feast very quickly because of that change. And this problem's not going to be fixed by, fooling around with our migration intact. It might ease things in the shorter term, but while we're underbuilding, it's always going to remain a problem. And if this is exactly what a number of other similar advanced economies are going through at the moment. But the government has, as usual, a short-term focus. Guess what? Next year's an election year, so it's doing all that it can to make things look a little bit better.
Well, what did the latest migration figures show, Andrew?
Well, we did see a jump, still strong migration, Michael, but the trend was down. And the latest data is a little backward looking. It's June quarter data from the ABS. And when we look at the annual results, we can see that they're lower than the annual results over the previous March quarter. June is also a period where we see, in terms of seasonal effects, fewer migrants coming in. But we're looking at the data based on the June to June numbers going back, and we can see that they've fallen away reasonably sharply compared to the previous annual data. When we look at the breakdowns, Victoria overall is still the leading beneficiary of net migration, and that's another, I guess, positive in terms of turning around what's been a subdued Victorian or Melbourne housing market. New South Wales number 2 in terms of net migration over the year to June. Queensland's still holding on as a very strong number 3. And of course, this is not just about international migration; it does include interstate migration as well, Michael. And Western Australia and South Australia are also lower, but still holding quite strongly and haven't fallen away as much as New South Wales and Victoria. So that's the full picture. And when we look at the breakdowns in terms of overseas versus interstate, we can see New South Wales continuing to lead in terms of net overseas migration. We know that in the post-COVID period, New South Wales was the beneficiary of a big turnaround in expats coming into Sydney, particularly through the post-pandemic period. A lot of that accounted for some strength in the Sydney housing market, with those expats obviously looking for somewhere to live. Victoria, number 2 in terms of net overseas migration. I'm expecting that to move ahead of New South Wales sooner rather than later. That's probably the change in the dynamic. Is Victoria usually is the leading state for net overseas migration, but it is trailing New South Wales at the moment. In Queensland, number 3 place, followed by South Australia, and very strong results for Western Australia, Michael, for net overseas migration. So Western Australia is obviously appealing to a lot of overseas migrants and as a destination. And of course, that's another driver of that very strong Perth housing market. When we look at the interstate migration data, Queensland's still the strongest. Of course, that was the significance in the COVID period was that we saw a significant shift in interstate migration into Queensland. As a result, I would suggest exodus out of the very strict lockdown conditions in Melbourne, and still strict but not as strict in Sydney, and that encouraged many to move to Queensland. Of course, that was a factor in pushing up rents and prices spectacularly, and that's continuing in that particularly southeast Queensland, but not just southeast Queensland, all along the eastern seaboard. Most of those big LGAs, Queensland LGAs, local government areas, are experiencing strong rent and prices growth in their housing markets. So Queensland's still leading the charge there, and as usual, New South Wales sheds interstate migrants fairly typically, and it's interesting that the number that leave New South Wales, or the net loss out of New South Wales, is almost equivalent to the net gain in Queensland, Michael. But Victoria's starting to turn around, and it actually had a net increase in annual migration over the year to 2024, interstate migration. And, and as we just discussed, that it had a loss over through that COVID period as people decided to head up to the sun and what they perceived to be a safer environment to.
Yeah. Well, interestingly, there's also been international students, different sort of a subset of those people coming from overseas that have been blamed for our housing crisis. That was an easy scapegoat. It's tempting to be simplistic. Oh, more students means more demand. But I just recently read, Andrew, that the Student Accommodation Council showed that international students only account for 6% of our rental markets, but they're all concentrated in general in the inner city areas where most student accommodation is located. Apparently, a staggering 73% of local government areas have got an international student population of less than 1%, which actually makes sense. So students aren't to blame either, even though they've been cut considerably too.
Yeah, and they're temporary visas, Michael, as well. So they're only here for the length of their study period. So they're not really part of this
No.
Model. And there's a real twin effect here, because it may improve notionally the demand side of the rental market. But as you said, that's up to question. But there's no doubt that fewer students are going to affect the university sector, which is one of Australia's biggest export markets. And it's not just the income from students that is a driver of our economy, but it also creates those relationships with countries that view Australia as a positive environment for higher education, particularly. For families to save to send their children to Australia, and that creates, what I think are very positive relationships, particularly through Asia, Southeast Asia, and that's been the case for a couple of decades now. And universities are going to suffer with, because they rely on, to a significant degree, on the income from international students to keep their businesses running.
If the international students don't pay, somebody's going to have to pay for the infrastructure, for the research, for the education, and that would be either local students paying more or the government taxes paying more. That's us. So no, I don't like that idea either.
And they look for alternative destinations, Michael, such
Of
as Canada.
course, and there are.
There are, particularly Canada, and but Canada is also. This is what I'm saying. These issues aren't just for Australia. Canada's also reduced its international student intake for the very same reasons that its infrastructure can't match the demand. And again, it's because they've undersupplied. Because of all the restrictions they have also on new building, they've undersupplied their housing markets, and they're going through similar circumstances, not identical but similar. And their response to that is on the demand side, which is just short-termism. But the Canadian government is under a lot of pressure now, and it goes to an election soon, maybe sooner rather than they'd like to. And that's one of the big issues they're confronting now is high rents. But it's in established economies like Canada and Australia, this is something that's happening, around the world.
Regularly, My Housing Market reports the National House Building Cost Index, giving us an indication of what it's costing to build accommodation. And even though the cost of building accommodation has fallen over time, it doesn't actually mean the cost of building has decreased. People think, oh, it's going to cost less to build my house next year. No, the rates aren't rising as much, but there has been just a little uptick recently, Andrew.
Yes, Michael, that's correct. We've seen an increase in the. We've seen, to set the background to this, of course, we had a breakout in house building costs through that post-COVID period, and it was driven by the home builder policy of the previous government, which created a lot of demand with handouts to those wanting to build a new home. We didn't have the supply side energy to match that demand, and that means we didn't have enough building workers or materials. So house building costs went through the roof, and that was a significant contributor to inflation. House costs or housing costs are a big part of the basket of goods in the ABS model, and we, differently from other jurisdictions, we measure house building costs as part of that housing measure, housing costs measure. So, as I said, it was a significant contributor. Now, we have seen that the track of increases has declined over the last 12 months, 2 years, and but however, that is just looking a little less stable. The downward trend, Michael. When we look at the annual growth rates, they actually picked up quite strongly over October, up by 4.3%, Michael, which is just becoming a little bit of a concern. I mean, it's a lot lower than the 23% we had at the peak 2 years ago. And even a year ago, house building costs were rising by 7.9%. So it's still below that. But the trend is just looking a little bit uncomfortable, Michael. It doesn't look like it's a one-off. It looks like we're moving into a period where we're getting some more upward pressure on house building costs. And, I'm not surprised about that, Michael, because if we look at, and we discussed this also, the latest or the building approval data for nationally is showing a big rebound in approvals for houses. Apartments are still dragging below where we'd like them to be the trend for apartments is at historical lows, but housing is actually now, or houses have now started to pick up. So we're certainly getting a lot more demand now for new houses. And I think that's showing its way back into higher costs, Michael. And this wouldn't be good news for, the Reserve Bank or those that are looking for lower interest rates, because, this is a significant part of what contributes to the inflation rate. As I mentioned before, housing costs house building costs are included in housing costs by the ABS, and we're just starting to see that trend reverse, Michael. Now, just as an adjunct to that. The other part, of course, is rents, particularly for house costs, and we're seeing some better news for housing costs in terms of rent. So that's sort of offsetting this. But again, at the end of the day, it's not good news for getting back to our target range for inflation. And as I said, I'm not surprised here because we are seeing a big rise in demand for new houses, really across the board, particularly in the boom markets of Brisbane, Perth, and Adelaide. We're getting a lot of new house building happening there.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, Andrew, every week we discuss the auction results because it gives us a good indication of how the market's feeling. And I was actually surprised how many auctions there were still on this last weekend just gone, Andrew.
Well, what we're really counting here now, Michael, is the week. We sort of, last weekend was, or last Saturday was the last real Saturday in terms of the Saturday weekend auction market, but we have been looking at the weekly auction results now. So what we're looking at here is the number of auctions conducted over the week, and there was enough to put together a model, which we've done. We don't have the data for the same full week last year. Well, it's irrelevant in that sense because we were looking at weekend results, but I think it's interesting just to see how we really finished the year off because we are counting the full week. And there is a trend now, Michael, not a great trend, but a modest trend to have more auctions conducted during the week, not just on the Saturday. So that's why we're looking at the full week's results, and nothing really different or unexpected from those results. Of course, there was, with really nothing happening on the Saturday, there was fewer auctions, just 323 auctions in Sydney over the week, well down on the 979 conducted over the previous week. Clearance rate a little bit lower. Again, it's a distracted market. Everybody's out there buying their Christmas presents or getting ready for their Christmas meal celebrations, Michael, as I'm sure you are. But so a little bit of a distracted market, but so a little bit less the clearance rate, 60.5 in Sydney. Melbourne actually had a higher clearance rate, half the number of auctions over the week compared to the previous week. And that Melbourne market keeps producing these mid-60s, very consistent clearance rates, Michael. So not really generating a lot of prices growth, but certainly that would be reasonable news for those sellers that are in the marketplace. Again, no surprise, Brisbane, half the auctions over the week compared to the previous week, and its clearance rate a little bit higher, but in those now tracking below 40%. Adelaide actually had more auctions, certainly fewer than the week before, but not the big decline that some of those other capitals have experienced over the week, and a higher clearance rate, just under 70%. And Canberra also conducted a reasonable amount of auctions, 50 auctions over the week, and quite a reasonable clearance rate from Canberra. So just finishing, this really is finishing off the year, Michael. I'm not sure we'll have any auctions conducted over the week, so we won't be back till February with this data. But it's interesting to see when we look at the trends for the auction market, just where we finished off for the year, because typically we start the year where we finish the year for the next year. So in Sydney, 61.9%, dragged down a little bit because we're including the final week, of course, with those weekly auction numbers. But it's not too far away, Michael, from where Sydney was a year ago. And when we consider that we're taking that extra week of what is clearly lower energy in the market, I think that that's a reasonable comparison. Melbourne is actually higher than where it was a year ago, Michael, in terms of its clearance rate over December. So again, some positive news there for Melbourne as maybe a launch pad for more activity next year, which we have been discussing. Similar Brisbane, a little bit lower, but that Brisbane market's still strong when we compare it to a year ago. And Adelaide, same story, just a little bit lower. And I think, as I said, it's a little bit of that extra week that we're counting now in terms of auction results. But really, at the end of the day, Michael, we're just about back to where we started from, a year ago in our markets. So interesting in terms of the prospects for next year. And of course, next year we will be producing those auction clearance rates on my LinkedIn account, Doc Andrew Wilson at LinkedIn, every Saturday at around 6 o'clock. And Michael publishes the full national report on Sundays, with which includes the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer over the week in all the capital cities. So a little bit sad, are you, Michael, to see the last of the auction results? But not really.
Well, I'm looking forward to our vacation and having a break from all this. But the year's finished off very differently to how many people expected it. The markets have been resilient despite interest rate challenges, despite local political problems, despite overseas geopolitical problems. The challenge, though, is we're finishing the year with a huge undersupply of properties. I think if one was able to actually do the numbers correctly, we'd probably have a bigger undersupply than we started the year with, Andrew.
Yeah, and what's interesting, Michael, is that we're not going to be too far away, and we'll discuss that when we have a chat about forecasts, but we're not going to be too far away with our results overall this year to where we were last year in 2023. Now, of course, we've had a bit of a different contribution from the capitals when we're looking at the national result. But at the end of the day, we're actually going to be very, very similar to where we were last year in terms of national house price growth, which shows the consistency of the market. But having said that, Michael, we've had a big surge in the number of properties sold this year compared to 2023. So 2024 has been a big year for the actual, compared to 2023 has been a big year for sales, actual property sales. So, and that's because we've had more listings coming into the market as sellers have regained confidence following the interest rate rises of 2022, 23, and sellers have come back into the market, and there's still plenty of buyers around, and that's kept the market ticking over. And I think we'll see the same next year, Michael.
It'll be interesting to see what the final figures are, but it seems like there's going to be something like 530,000 property transactions in 2024, and interestingly over 100, maybe up to 110,000 first home buyer transactions. So that's encouraging that about 20% of transactions were to first home buyers, Andrew.
Yeah, well, that's good news, of course. The aspiration for housing is still very strong, for home ownership is still very strong in Australia, and that's what that's what underscores its, as we've mentioned, its resilience and its robust results going forward. As I think we'll find another same old next year, particularly I think with the interest rate cycle moving in favour of the housing market next year rather than against it, as it has been the last 2 years.
Well, we'll be back in a while, in a couple of days, to have the end of year, end of December and end of year property figures. So look forward to catching up with you at the end of the month, Andrew.
Thank you, Michael.